So here we have one question. Can you go through this?
Yeah.
Mhm.
So, Chaya provided the following information. For the year
Mhm.
ended to 31st December 2020,
Mhm.
credit sales is 114400, credit
Mhm.
purchases is 63110,
Mhm.
gross profit is 51,480,
Okay.
and then at 30th December 2020, same date,
Mhm. Mhm.
inventory is 2,850, trade receivable 15,400, trade
Mhm.
payable 7,430, and bank overdraft is 6,190.
Mhm. So first information what they have given that during the year what happened. So during the year credit sale amount of credit sale is given. Then during the year what was the credit purchase that is
Mm-hmm.
also given, and the amount of gross profit is also given. And then we have given current assets and current liabilities on the last date of the accounting year, right?
Right.
Now, what is requirement A? Complete the following table. Okay, they are asking ratios. Three ratios they have asked. First one is gross margin, right?
Yeah.
So we will first discuss on gross margin. So first we need to write the formula. What is the formula of gross margin?
Forgot.
Gross profit multiply by 100 and divided by a net revenue,
Not
right?
okay.
Gross margin means a percentage of gross profit to net sales or net revenue,
Yeah.
right?
Okay.
So in this question, what is the amount of gross profit? 51,480 dollars,
51,480. Yeah.
right? Multiply by 100 and
No,
divided by,
51,480.
okay, 51,480 and multiply by 100 and divided by how much? What is the net revenue?
Not credit
$114,400, right?
sales. Yeah. Yeah.
Credit sale. Only that is the revenue we have, right?
Mhm.
Hmm. So now let me calculate this.
If there's like additional revenue, do we also count that?
If we have cash sales, so 51,480 multiplied by 100 and divided by 114,400 dollars. So it is coming 45.09, and this gross margin we need to show in percentage.
Mm-hmm.
54.09 percentage. It means my gross profit is 45.09 percentage to net revenue.
Yes.
Yeah. Any doubt what is the formula? Gross profit multiplied by 100 divided by net
By
revenue.
100 divided by net revenue.
Yes. So gross profit, which is already given in the question. So I will use that figure and multiply by 100 divided by net revenue. So I got 45.09 percentage,
09. Yeah.
right? So this both working we have to show in the working column. And final answer, this 45.09 percentage I have to show in this column for answer. Now, which is the next ratio they are asking? Trade receivable turnover
The
days.
next one. Yeah.
Trade receivable turnover turnover days. This is also known as average collection period.
Mm-hmm.
Okay, do you remember the formula? How to calculate trade receivable turnover days? 365, right? Multiply by trade receivable and divided by net revenue, net credit sale. Here we will take only credit sales, right?
Okay.
Remember, we will not take net revenue, we will take net credit sales. Hmm.
Yeah.
And this ratio shows that how many days we are taking in collecting money from the credit customers. On an average, how many days the business takes to collect money from credit customers, right? If these
Mm-hmm.
days are high, it means business is very poor in collecting money from credit customers. there will be high chance of bad debts. So always we need to
Yeah.
try to reduce this number of days, right? So now let me put the data. 365 multiplied by what is the amount of trade receivable given on the last date?
15,400.
10,400 and divided by net credit sale is 114,400,
114,400.
right? Now
Yeah.
let me calculate 365 multiplied by $15,400 and divided by $114,400. So it is coming, just a minute. Yes, 49.13, or we can say 50 days, or
50 days.
or 50 days, or
Yeah.
50 days. Got it?
Yeah.
So it means if I sell
Yes.
product to credit customers today, so on an average 50 days I will take to collect money from, or we can
Mm-hmm.
say that those credit customers will pay me after how many days? 50 days.
50 days.
Got it? So almost 2 months they are taking.
Yeah.
So next time, next
Yes.
year, try to reduce this, but try to bring down these days. 50 to 45, 45
Mm-hmm.
to 40 days like that. Because
Yeah.
if these days are more increasing, it means that is not in favor of the business. It means credit customers are taking too much
Yeah.
time to pay us. So it means there will be high chance of bad debts in the
Yes.
business, right?
Yeah. Yes.
Now, which is the next ratio?
Then it's a current ratio.
Current ratio. Next ratio is current. Do you remember the formula? Okay, formula, any idea? No. So let me write here, don't worry. Current assets upon current liabilities. Current
Oh, okay.
liabilities. Okay, this is the formula. So formula for current ratio is current assets by current liabilities. Now here we have current assets. Inventory is current asset,
Mm-hmm.
trade receivable is current asset, right?
Yeah.
Yes or not?
Yes.
Inventory is how much? 2850 plus trade receivable how much? 15,400. So both I will take. So my
15,400.
current asset is this
Yeah.
much, right? And current
Mm-hmm.
liability is how much? Two item we have.
Trade payable plus bank overdraft.
Yes, $7,430 plus $6,190. So this is the
6190.
bank
Yes.
overdraft. So that is the current liability. 13,620 is the current liability, right? Now
Mm-hmm.
let me calculate 18,250 divided by this 13,620. So it is coming 1.34 and we have to show in this traditional format 1.34 is to 1. Got it?
Okay.
It means if my current liability is 1, against each $1
Mm-hmm.
of current liability, I have $1.34 of current assets.
Asset.
Right? So this is the answer.
Yeah.
Got it?